Greetings, everybody. This is Jeff Scott. Welcome to this edition of my weekend review. I'm having some strangeness here. I don't know why this is showing, so maybe if I just click on it, it'll go away. All right. I titled today, Are We About to Have Another February Meltdown? I don't know. I think part of me thinks so. I think that the stuff that's happening with Wall Street bets, short interest, etc., could topple this market. We certainly are extended off the March 23rd lows of last year. We've had such a great run. But you got to balance that with the fact that we've got Janet Yellen as Treasury. We got Powell as the Fed. And they've already been very clear they're not going to raise interest rates. And eventually we'll get some stimulus out of Washington. So you put it all together, maybe it's hard to believe we get a massive sell-off. But I'm not certain that I wouldn't expect, and I do expect some volatility over the next couple of weeks. I did read somewhere that February, in the first year of a presidential cycle, is typically a bad month. So we'll see. As always, it's for educational purposes only. I'm a doctor, not a broker. I'm independent. I have paid for the tools that I use, and I never get paid for talking about somebody's tools. And trading involves risk. You and your owner are solely responsible for any investment decisions you make. I'm not going to spend much time here. I've done this hundreds of times, but I've learned from a lot of smart people. Many of them are up here. And I like to call my style of trading, be your own guru. And that's my suggestion. And I say it all the time. I used to have some live meetings. Learn from people that you respect, that make money, but you don't have to trade like me or John Person or cancel as O'Neill did. You trade what works for you. And I think all of us have the power that we don't have a specific brand, so we can create our own brand based upon others. And if you want to invent stuff and be an author and a creator, that's even better. For me, I learned from some smart people. I took the pieces that worked for me and I became my own guru. I own a lot of software. I need my TradeStation and Thinkorswim with a lot of indicator sets, Hgsi and EdgeRater for both during and after the market. And then some of the indicator sets I have are from John Person, Sagar's Q tools, and then Dr. K, his tools. Now, I've done sessions where I've invited people to talk to you. They always offer me money because apparently in the trading software business or trading education, there's this thing called affiliate marketing. And with affiliate marketing, it's very typical for somebody to introduce the folks to the traders to their audience and then take a piece of everything that's sold. I don't need anybody's money. I have plenty of my own, so I don't take that money. And I ask them to pass it on to you as a deeper discount. So in every sense of the word, like others who post on YouTube for the sake of helping people, I'm an unpaid volunteer, and this is just education. Now, I do help HTSI intentionally. I'm one of their long-term users. I'm friends with the proprietor, and I started doing these things over a decade ago in an attempt to help support some users because it's not always the most intuitive program. It does offer a free 30-day trial, and under investing strategies, you'll see a lot of videos I put together. And if you email me, and I can share with you some vocabulary videos I have, and there's a lot of user videos from Ron Brown that are outstanding as well. I ask myself every day, where are we on this curve? Been doing it every week, going back a long time on these videos. And I keep waiting for this right shoulder for us to go over it and start stage 4 of fear. I'll be the first to admit that over the last several years, every time it feels like we're going to do that, we take another leg up. No, it's not what happened 2/3 into February last year, February 20th, 21st, whatever the date was. We went over the cliff and we kept on falling. I don't know, based upon what happened last week, Is it time to do that again? I don't know how much of last week's pain was covering shorts, which required liquidation of longs. And if I had to liquidate, I'd liquidate my expensive stocks. So the Amazon, the Teslas, the Apples, the Netflixes, the Microsofts, and many of those, despite good earnings on several of them, ultimately sold off. Microsoft, I think, is still up on the week. So is that all that happened? And is it all hunky dory and we go back to the moon? I don't think so. I think that we've gotten at least some sideways uncertainty, but I do think there's a chance that this market takes a drop here. Now, because of what I started with Janet and Jerome and stimulus, it is hard to believe that we're going to see a massive correction. Especially as we've got two new vaccines, Novavax and J&J, one of which could be approved this week for emergency use authorization. Hard to believe that the market totally discounts that, but it could. So since I'm stuck up here, I did raise cash. I do have smaller positions. I've sold some premium. And then I've started to nibble on some contra ETFs. I bought puts again on my Amazon and my Apple and a couple of my other positions. And if I do think this market's rolling over, I'll start selling bear call spreads as well. It's interesting, the sell premium comment. When I think this market is a cha-cha-cha, rah-rah-rah, I typically have a lot of long calls. But when I start to get to uncertainty or when a stock pops because of news, especially crazy news, I do have a tendency of selling calls into that so I can put some premium into my pocket. And things like Sorrento, the premiums of out-of-the-money calls got to be just obscene this week. Now, that may turn out to be great if the markets go sideways or pull back. But if any of those stocks, and Space is another one, get stuck in this mania of short covering, I'll probably regret that I sold some calls against my positions. If I look at the sector review on Friday, and this is just a simple chart, we're starting here. I've got the constituents of the various S&P Spider ETFs. I got a few extra on real estate, but you can look at this and show me where the strength is. There was no strength on Friday. I don't care if you're looking at even defensive plays, utilities, just a little bit of green, healthcare, a little bit of green, real estate, a little bit of green, staples, nothing, all red, industrials, mostly red, financials, mostly red, energy, all red. So clearly a down S&P sector chart. If we look at the major markets, let's just open this up here. I never know what's going to happen when I flip in and out of these sometimes. Let's just take a look at the daily charts. So I've been, these lines are here for a reason. We struggled to get above this line here, and this would be, I think, the 123% retracement. We failed at the 138% retracement off the March 23rd lows. And for weeks, we've been talking about how we were stalling here. This was a resistance line, and we've broken through that as well. So I look at the S&P 500, and I see a market that's breaking down. If I want to be bearish, I've got a John Person sell signal. I've taken out the 17-day simple and the 50-day. I closed below the 50-day moving average. And until I see this market move back above the 50-day moving average, I'm going to continue to sell on strength and build a short position in contra ETFs. That's the bearish position. We could open up above that 50-day moving average tomorrow, and maybe that becomes support and becomes a good buying place, because we could actually go back here and say what was resistance here in this area ultimately turned into support, and we've just pulled back to support. So I have to be an open mind. I'm concerned that this market's going to go lower, but I'll wait and see what it does on Monday morning, as will you. The Nasdaq sell signal came in on Wednesday, is still above the 50-day moving average, so it's a little bit healthier, and it pulled back to this level here, which back in the beginning of, well, in the last quarter was resistance, and then it became support. And this is an area that we've bounced before that we're getting into. So a range that you could see a bounce, but we don't see a bounce yet. And like the S&Ps, I have to be leaning towards the bearish, but I'm going to be very open-minded and trade the market that I get. If I look at the Dow futures, the YMs, again, like the S&P, and perhaps even worse than the S&P, has broken through the 50-day moving average as well as the others. Now, the interesting question here is, see, I'm just going to draw this. I always get into trouble when I start drawing. Drawing, tool, oh, just a horizontal line. I'll forget that. Could draw this line. Well, it's not exactly. I guess the point I'm trying to make is we've just pulled back here to a prior support line. So a place where a bounce is clearly not out of the question as well. So again, a lot, it's a very ugly pattern, a breakdown, but it's not beyond belief that we could see a bounce. Now, if you go back on this side, we didn't see a bounce. We broke through the 50, and the next day we kept on going. So are we going to something like this, where we broke, went sideways, and then started off to new highs? Or are we going to see the pattern over on the left where we knife down? This was unusual. And so I'm not going to rule out the possibility that this market could bounce from here. The Russell looks a lot like the Dow, had been the strongest in the market with this major run up ever since the buy signal in November. Also has a sell signal popped in here. The VIX has been above this 22, 23 range going back to February of last year. And the VIX broke out this week, and then it's sort of flagging. I've got a long VXX position here because, well, it's a hedge. And then the dollar struggling now to get above the 50, clearly off its lows, but can it break out here? Time will tell. Let's go back into the PowerPoint. We'll just look that way at the daily charts. Sorry, let me change this. Way. As far as the weekly charts go, you can see clear breakdowns across on the weekly charts, but week breakdowns off the highs. When you see these white balloons here on the last bar, that meant we set new highs in each of these. So did we set red candle highs and now we're selling off? That's what it looks like. But I will caution you and caution me to let's see what it does on Monday morning. Buy signal came in on the VIX on Friday, or this past week, and as we showed you, it took out some resistance. And the dollar's bounced, but it's really not showing a whole lot of momentum. Thought I'd look at Sager's pictures in TradeStation using the Q tools. And last year, when the markets died, I saw a similar constellation of findings. Too early to tell, but what we have, if you look at each of these on the daily, oh, stop that, Jeffrey. There we go. These two lines here is sort of the outer boundary of the expected, where the you expect the indexes to trade. Here's the lower boundary. There's a number of various support signals in there, but you could see any of these red marks here up at resistance. These are all reversal type signals. Headwind resistance, a John Person sell signal, and a big drop down. 1, 2, 3 down days. We look, that was the spiders. You look over here, similar pattern. You got a bearish headwind resistance and a John Person sell signal coming in at resistance and breaking through a trend line. You look at the diamonds, again, the same basic pattern, breaking through a trend line, as well as the IWM. Now, the challenge is you're still in uptrends, and you can see on each of these, you've still got some support underneath, although you would hate to get there. Believe me, you'd hate to get there. If I look at the weekly versions, you could see that we've really moved up a lot over the last couple of months off of this trend line support. So you could actually see corrections down to support, not violating the uptrend. You got higher highs on every one of these charts within the last couple of weeks. Without violating the uptrends, you could still have a pretty ferocious pullback. And that's probably my middle road scenario, my high road scenarios. We go off to higher highs. I think it'll take a lot of work to get through and have a major sell-off here. Not out of the cards. And you'll notice down here on the bongos, the weekly bongos have gone red on 2 of the 4. The Kelly cycle reversals have fired as well. So we have a constellation of things here that suggests to me that this may not just be 1 or 2 days of a pullback, and we could see something a little bit more ferocious. Now, I always like to look at what's going on underneath the averages. Here is the 10-year and the 30-year. These are the rates, and you can see they both moderated or paused in what have been strong uptrends this week. You want to see rolling over AD lines in white and the IWM in left and the IWB, which is the 1000 on the right, and you can see that the AD lines and stock prices have rolled over. If I look at the NYSE, you can see the AD line has rolled over, as have all the major market ETFs as far as their levels listed up here. And the only thing that turned up at all this week, and no surprise, was TLT, with the interest rates holding relatively steady. I saw a major breath thrust to the downside, or loss of breath. The number of stocks above the 200 have turned down, but look at the massive drop where less than 50%, about 40% of the stocks now are above their 40-day SMA. That's a big change from where we were just a couple of 10 days ago. And if I look at the 3-month new high, new low, something that I've talked about several times, when it gets up to this horizontal line, markets reverse, and we dropped a lot. Well, we could still drop quite a bit more, but this market has taken some hits, and not just to the averages. On the daily McClellan, we look for extreme readings. Well, look at this, and maybe this is bullish. We're getting extreme negative numbers on the daily oscillator. Now, we'd expect it to get down a little bit further before it's meaningful, but not much further to go to where you get reversals of some of these modest pullbacks. This was clearly not a modest pullback a year ago. And we've talked before that we keep hitting resistance on these bounces on the summation index. On the weekly, heading down towards an important level on the oscillator, failing on the summation index. So perhaps with a couple more days of damage would be enough to see a bounce. Could see a bounce on Monday. As I said, there's conflicting factors. Imagine if either J&J or Novavax gets an emergency use authorization over the weekend. The market, especially small stocks, would probably have a big up move. Buckets are interesting. In a little as a week, Friday a week ago, Friday this week, you could see we flipped from a bullish posture with 73% of the stocks above the midline of their Bollinger Bands to a bearish posture where 75% of the stocks are below. You could see here that about 14% of the stocks in the S&P 1500 are trading below their Bollinger Bands. It can get a lot worse, but we're starting to get extended to the downside very quickly. Now, I love Sager. I made a comment during my call last week saying, wouldn't it be nice if Sager added the buckets real time? And he did to the Q tools. So now I'm able to watch, and you could see you got pretty much the same pattern here as you do over here. The dark red dropping on the fourth thing as it did here would be Friday. The lighter color would have been Thursday. And you could see even between Thursday and Friday, the number of stocks above the midline totally dropped. So more evidence that we're starting to either turn much more bearish for a longer period of time because we're not at a level that we have to reverse, or perhaps within a couple of days we might see a bounce. Now, if I saw a Hindenburg-Omen here, then I probably would be a lot more nervous. But there hasn't been a major market correction that has not been associated with the Hindenburg-Omen in well over 50 years. Now, 5 to 8% correction, you could get that without a Hindi. Now, the interesting thing is percentage of new highs has now dropped below 2%. They were back here 14, 13, 18, 19%. So you've had a lot of the froth in the NYSE and clearly in the Nasdaq as well blow off. But you've got almost new lows. And to get the Hindenburg to fire, you got to have new highs and new lows both over 2.2%. And so we're nowhere close. But if this continues on for any period of time, you might expect to see some of those new lows pop up on the NYSE. From a market tone on Wednesday, think about this week, from what I recollect. Monday, I set all-time highs in my portfolio. And then we had a reversal. Tuesday was okay. I got slammed on Wednesday. I had a great day on Thursday, and I got slammed again on Friday. And if you look at the market tone, you had kahunas across most of the major market indexes, except for the IWM on Wednesday and Friday. And we flipped the Woody indicator from all green now to red and yellow with very little green except for the Russell. So we have had at least 2 shots across the bow of the bull, and perhaps we're moving on to a much darker period of the market. Now, I've never seen anything like the short squeeze that we saw this week, but they have occurred in the past. And it is kind of interesting to watch a bunch of individual investors sort of crowdsource and cause the short squeeze in GameStop and AMC and others. And I have to admit, I was paying a lot more attention to short interest this weekend. But if I look at the markets as a whole, they don't look like they did anything this week. Very little movement, some big movement on some stocks. But if I look down here, and this is the 23rd to the 29th, you could see that the highest EPS ranks and relative strength ranks performed well, group rank, but everything else was underwater. If I look at the GPA analysis, the S&P 500 was down 3.35 on the week. My holdings were down 4.42. As I said, I took some pain. My buys were down 356, and my filtered buys, although most of them were losers, were still up 0.38%. Now, how do I compare to the S&P? A little bit inferior. And then in orange, we have IBD Live Watch List, IBD 50, Marcus Smith 250, your weekend review. And, clearly growth underperformed. Now, if you look here on the left, I just took all securities and looked at what were the biggest returns on the week. Here are 10 stocks that all had over 100% returns on the week. Did I own any of those? Well, I used to own GameStop from time to time, but no. I mean, Muriel Siebert's thing, geez. Net change on Friday was up 451, so it was up 121%. I haven't heard her name since she stopped doing TV commercials. I thought they were out of business or got bought by somebody. So this was a week where if you had bought the right stocks, if you participated in those short squeezes, you made a lot of money. I get a lot of calls from my friends asking my thoughts on the short squeezes. I mean, how can the democratization of investing, where the small guys get together and take on the big hedge funds, how can it be a bad thing? And conceptually, I think it's great. I've watched stocks that I've owned get assaulted by short sellers, Citron and others, putting out information that didn't always turn out to be true. Of course, they had a short position on when they did it. But short, as I understand it, shorting stocks also plays an important role in maintaining liquidity and stabilization of the stock market. So I'm not sure we should get rid of short sellers. I do think this issue of having 140, 180% of the available stock short is problematic. But, we do get hurt as individual investors because I do believe we saw forced liquidations last week, and we may continue to see them in the next few weeks, which ultimately may hurt us short term. But perhaps if we break up some of what's happened with the hedge funds is not a bad thing. The bad thing could be that the regulatory authorities, both the SEC and Congress, get involved, which is never a good thing. Sector strength, well, with the markets blowing out, so did several of the sectors, and at best we're mixed, but we're mixed and weak if I look at the Woody indicator. Within Q, you could see on Friday all the sectors were negative. You had a little bit more positivity over the last 2 days and 3 days. That would be one sector. But in reality, we had a really bad 5 days. And over 5 days, you could see the percentage of sectors that were positive, industry groups that were positive, and stocks that were positive. So the vast majority of all were negative. It was such a bad week that it flipped the 2 weeks to very negative as well. Over the month, a little bit more mixed. And then I guess perhaps related to risk in the market, I remember on Thursday, we were having a great day. I posted in one of the forums that I post, hey, isn't it interesting? Utilities are the leading group. You would think with a strong market, maybe we'd see something else. But I think that was telling us that it wasn't a strong market. Utilities and healthcare leading, energy, financials, industrials failing. And I think you need financials to rally this market, and they've certainly weakened over the last several days. Talking about weak and perhaps indicative of a lot of our portfolios as growth stock investors are the canaries, which is a FANG plus, 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 plus. It's got Tesla in it. It's got bookings. It's got Baidu, and you can see what's up here. We changed Priceline on the chart. I just never changed it on the name here. And what a great uptrend, and we rolled over. Monday, we had a nice day. Tuesday, we gapped up and reversed. Wednesday, Thursday, and Friday, we closed, as you could see, a very negative day. With not only a negative day, but a mobile breakdown, a person sell signal. We had pocket pivots to the downside and kahunas. So this leads the market lower. It's probably healthy for it to drop 10% and pull into the 50-day moving average and bounce from there. We can see here this was a great time to get in. The 50 is down here, but it won't be good for my portfolio either. The 50-day moving average will be another 7.5% drop. News and earnings. This was a busy week on the news front as we had Powell and the Fed meeting. As I look going ahead, again, what's not down there is COVID and vaccines, et cetera, and that might be the most important news. You got ADP employment and a PMI on Wednesday, jobless claims on Thursday, and as John Person, my buddy, likes to call them, the monthly unenjoyment report on Friday. So whenever you got the first Friday of the month, you got a busy news week. And add to that a massive earnings week. Look at Tuesday after the market. Amazon, Alphabet, Chipotle, Amgen, one of the stocks I liked to buy perhaps is Perkin-Elmer, but I probably will wait. And as you look at this, you've got some genomic companies, you got pharma, you got biotech, you got technology, Exxon and BP, you've got energy, you got McKesson. Whoa, what a week. What a week in the markets. It's a judgment call to hold stocks over earnings dates, and I feel it's very bad judgment to not know when your stock's earnings date is scheduled. Let me just make a comment about that very quickly. I know that some of the people that follow me and have been to my live meetings, like I do, heavily rely upon the guru indicator in TradeStation. And you're going to find that it's not there anymore. It's no longer working, and so you can't use the guru indicator anymore in any of your watch lists. So let's go over here, Sonar. I found that one to be extremely important. So it turns out that if you go to the Windows App Store, there is something called next earnings date. Where'd it go? And I'm just going to launch it to show you what it does. And it basically paints the earnings date. It tells you the date, the time, whether it's confirmed or not, and how many days to go. So I've started dropping this new earnings indicator into a lot of my radar screens. So the guru is gone. Long live the new. Everything got messed up when I changed resolutions. Long live the new earnings indicator. To me, it's one of the most important indicators. It's a great chat room that I have. All right, let's go back to my PowerPoint. Let's just go on to the next slide. So my thoughts, well, we fell from records highs as short sellers got squeezed and brokerage firms restricted trading. I saw nonsense over the weekend that suggests that stocks like Starbucks may be restricted this week. I can't understand that one. Big drops in the market. Russell worse at 4.4%. Look at GameStop. Now, who would want GameStop at 65 per share unless you were part of this Wall Street Bets crowd of buying it and refusing to sell it and ignoring your day-to-day balance because you believe in it. And frankly, it ran up to 483 before reversing later in the week. This is amazing. It's the poster child for the short squeeze mania rebellion. As I said, there's some restriction going on with the brokers, and I think there will be a lot of hell to pay with regulatory and legal because of that. COVID is worse and better. I saw statistics that suggest that the infection rate might be starting to come off the peak, but we're seeing more and more of the South African, the Brazilian, the English variants that are more bad, more virulent in medical talk. But then we heard the AZ vaccine was approved in the EU, and that J&J and Novavax have candidates with positive trial news that are marching towards an approval. One could occur as soon as this week. As I mentioned before, the Fed is dovish. They're continuing to push out expectations of rising rates, and that should be a positive if we're concerned about the market rolling over. News will drive it, earnings will drive it. As I said, I was hurt some this week as the markets turn lower. I'm up 18% year to date, but well off my highs for the month. Last year I was up well over 200%. If you multiply that by 12, I'm still doing okay, although I liked it better a week ago, but c'est la vie. My style, I get hurt at major market turns, and then I work really hard to get unhurt over the next couple of weeks. I do have puts on some of my larger programs and started nibbling on some contras. I think a bounce is a possibility, but I'll use it to lighten up. You can see year-to-date performance, so my 18% looks pretty good against that. All these indexes gave up 3 or 4% this week, so it was a tough week. All right, so I've spent a lot of time talking about the market. Every once in a while, somebody will make a comment about it. Let me tell you, if the markets are up 500 points on Monday and there's a new vaccine that comes out, it really doesn't matter what stock you're buying, unless you're buying the pro-COVID stocks. The market's going to fly up. But if the market's down 500 points on Monday because of this GameStop short selling and liquidation and margin calls, doesn't matter what stock you have, you're going down. So the markets matter. So the last thing I look at the markets before we move on to some top-down approach, but I'm not going to do much of that tonight. Why give you a lot of longs when I think this market might be going down? E-mini, this is one of my favorite screens I look at in TradeStation. And let me show you 6 things that all say the market's going down. Number 1, sell signal on TradeStation came in on Wednesday on John Person. In addition to the John Person sell signal on Wednesday, I had a Rsi Sell Signal. I have a red paint bar. When that paint bar is red, I could be long, I can be holding it, or I can be going short. I should not be adding to my longs. I am not at an extreme where I'm going to bounce. Notice the red dots that I've been pointing out the last couple of weeks, which were MACD divergence, have now resolved. Notice how the MACD could not even get to the same level of the prior MACD elevation despite higher highs. That was bearish. On the weekly, we're still working off that MACD divergence. It has not broken down with sell signals, nor has it on the monthly. If I look down here, I can see the weekly bongo has gone red. That's a more intermediate signal. We can see the high jump has dropped down to 29% as the market has given up quite a bit. That is a bearish report, folks. Now, let's look at the the Dow rather. And just a quick look, notice we have a weekly sell signal on top of everything else. Let's look at the Russell. Still not seeing a daily or weekly sell signal, but we rolled over on the Russell. And then let's quickly finish with the Nasdaq here. Despite a bump on Thursday, still a rough week. Lots of sell signals here. Its bongo, interestingly, has not turned green. That's a bearish looking market. If I look at the VIX, I'll look at, I think I can get the future VIX here. Let's see. /VX. Really? Okay. Some of my accounts have the VIX activated, some do not. Look at the VXX. You want to know why I bought the VXX? Because I had a buy signal, a Laguerre RSI. I've got a green bar. I had a buy signal on the weekly. It probably has limited downside risk right now. And look at the Laguerre RSI all coming in Tuesday or Wednesday. If the VIX looks so good, that's not great for my bullish positions. Hence, I have 300 calls of VXX that are now in the money. It will buffer a significant amount of my drop. And then if I go down here to the dollar, The Laguerre RSI turned negative, which is interesting. The weekly, the monthly are really still down in the dumps. We'll see if this is it on the dollar. That will have a lot to do with gold and what's now being called the next GameStop, which is silver. So I'm pretty bearish right here, and I would be very comfortable stopping, but I'm going to continue just because why not? But I want you to know I am personally not going to go in on Monday unless there's a big change in the futures with a list of 30 things to buy. Show you some other things that I find concerning. Concerning is a bad word. That make me think more on the bearish front. One of my favorite things about TradeStation is the scanner. So I run a lot of scans every night. Some I run manually, a lot go automatic. Weekly high close dojis. My favorite, or actually monthly, my favorite signal is a high close doji. A high close doji is a trading system. It is John Person's invention. It is another version of a evening star, but to me, it's a better one. And what it looks for is a close below the bottom of a doji after a run-up. That would be a bearish signal. That would be a low close doji. And a high close doji would be a close above a doji after a pullback. So the close above the doji bar is the high, and it's going higher. The close below the doji is a low, and it's going lower. Monthly high close dojis were 35. Z-Lab was one of them. It might get interesting this week. It's still not interesting yet. 35 bullish monthly HCDs. 175 monthly bearish LCDs, heavily weighted to the bearish side. Weekly low close dojis, I've got 267 to the bearish side. I've got 53 to the bullish side, overwhelmingly to the bearish side. And if I just look at buy signal 4, which is all comers, I got 23 person buys, new ones, and I've got 246 new person sells. And then the go with flow on a large population, 84 new uptrends with Sager's awesome go with flow tool. And what number am I at? I'm kind of thinking I'm seeing a 400 there. 464 go with flow negatives. Let me show what a go with flow looks like. Look at Yeti. A go with flow is telling me that I've got a bearish candle here, and I've gone to this signal here, candle color, which is a bearish candle. Now this is probably a shorting candidate. It's a little close to its boundary, but one could see a pullback down to this line, and that's very doable if I was looking at shorts. So if I want to find shorting candidates, it would not be unusual for me to start searching through the go with flows to the downside. And what I want to find them is up against resistance. Now I found some, and we'll take a look at them perhaps later on. So just in the scans, I see a lot more concerning on the sell side than on the buy side. On the Roy Kelly Cycle Finder on the daily, I got 14 buys. I think that's the daily. Let me see for sure. Excuse me, on the weekly, we got 14 buys, and I've got 450 sells. Is there any question of what this market ended the week on? It ended this week on very, very bearish. And like I said, unless something happens between now or Monday, it would not shock me for this market to drop further. Okay, we're 45 minutes in. Let's take a look at HGSI. First thing I like to do is I like to pull up Major Markets Plus. I get the warehouse view. They open up in here. I put the top-down view. I rank by raw combo, so I got to double click on it. There you go. And I've got the highest combo, which is the best performing at the top, the weakest at the bottom. And if you want to know why you're a growth stock investor and you lost money this week, I could show you the IBD 50 ETF, which looks a lot like the FANGs did. Look at this weekly bar, traded up and died. That's a reversal. Red candle high reversal on the weekly, broke through the 17 and the 8-day exponential on the daily. You know, a logical target is $2 away or $1.50 away at the 50, so it's 2.7%. That would be a great place to bounce. It can undercut it before it rallies, as it's done in the past. It could bounce from here. My guess is we're pulling down. Your portfolio probably looks a lot like this. Got a big tease Monday and then came down the rest of the week. When I see the VIX, silver, commodities, Bitcoin, TBF up at the top, and Dow Transport, Industrials, ARC Innovation, Midcaps, NYSE, FANG, Small Caps, Nasdaq, and the IBD 50 and the Russell at the bottom, I know it was a bad week for growth stock investors. It's just one of those weeks. Now, a couple of things. I didn't know the answer to this, but George put something on the board, George from HGSI. The CBOE indexes included the SPX and others. It also included the VIX. They are no longer available in HGSI. As I understand it, the cost, and I know this from a futures perspective, the cost on some of these instruments have become prohibitive. And so you'll notice it's called the pseudo SPX and the pseudo S&P. And instead of the VIX, I have the VXX and the UVXY. I can do the same thing without George having to raise all of our costs to pay money to the CBOE. So he's calculating it based upon the underlying ETF. So it may vary some from other published numbers. Let's take a look at the S&P 500. Now, is the sky falling, the world is over, and we're in big trouble? I don't think so. I think this market still looks damn good, to be honest. I mean, do I think we could pull back to this 34, 32 range, somewhere in here? Yeah, I guess we could. So if I had to pick, for example, a low road scenario, I might think that down here would be a target. Now, that's a pretty big pullback. We pull back to the 200-day moving average, which is about to enter that box on multiple times on the run-up, so that certainly wouldn't be unheard of. We're currently 10% above the 200, so that would be another 400-point drop. Okay, not unheard of. So that would be my low scenario. I think the intermediate scenario is looking at, let me just verify something. Okay. I think I got a funny moving average in this one. Let me see. Yeah, I don't see it there, so let me open up the... Sometimes I got funny moving averages. So I think that blue one's the 500-day moving average. Nope, they're down here. So what is the blue? Well, you got me. I thought it, well, actually, it is the 100-day moving average. All right, so it would not shock me to see a trading range here. Perhaps my intermediate would be, we live up here, is bounded by the 100-day moving average down here. And the high road scenarios, we go on to new highs. I think that we'll be lucky to stay in this medium box and go sideways and then break out to new highs. I don't think this low box here is out of the question. So are you prepared for that? As I mentioned before, we had traded up to the 138 and failed. We had stalled at the 127 on the way up as well. We've broken through those. We've broken through the 50. And we've got a new weekly bongo, a mobile breakdown from a squeeze. We're in a person sell signal and a couple of kahunas this week. I do not see strength there. And I think that it wouldn't surprise me for us to pull down to the 100 and if a deeper pullback to the 200. 10% is what I think is my downside worst case scenario, another 10%. If I look at the Dow Jones Industrial Average, similar story. Again, you can see in the past, it's gone to visit the 200-day moving average multiple times, 8.7%, so that's another 250, 260 points. I think that's my downside target. Does it mean we're going down? No. I mean, it's probably more likely that we stay in a box kind of in this area, sort of where we've been over the last couple of weeks, and continue to go sideways. But I've got to be prepared that, could we break down? Yes. And my downside target will be in the 28,000 range. Again, coming back and visiting that 200-day moving average. If I look at the Russell 2000, this one has had the best run of late. And, a modest pullback at best. It does have some negative things here. Notice that the bongo's still green. It hasn't even gotten down to the 50. So if I want to be bullish, I look at that. And then the Nasdaq composite, like the Russell, down but not necessarily out. Still 2.5 above the 50, 18% above the 200. I already showed you the 50. Earlier I showed you the FANG in the Canaries chart. You can see the FANG themselves have pulled back a ways to go to the 50, still about 8%. This was very extended. And you could see, if I open up the information box, see when I travel around here, this doesn't change. If I open up the information box and I look at this bar right here, and I look at how far we've come up, I thought that I could see those in here. Yep. So we got to 72.3%. Now these should change. I just don't know if they actually are. Let's see what happens here. All right, well, George, if you're watching this, I'm surprised that my current interval, and I guess maybe it's only going to look at the current bar. All right, I thought that it might show me, I guess over time, the percent changes and current intervals don't change, so never mind. But we got a lot more extended up there. When I see 100%, I expect it to come back, and that's probably too much. So the FANGs have pulled back. They could certainly bounce here with no real harm done, but I think a pullback to the 50 would not be surprising. Other things, we looked at the 50. Let's look at Biotech. Biotech has been strong and really is still in a nice uptrend and has not broken down at all. If I look at semiconductors, they did screw the pooch on Tuesday and a gap down on Wednesday. And then sort of is this a bear flag forming? And is it going to break down further? It could. The dollar, really, has it done that much? You look at the daily off the bottoms, but really how far? And you look at the weekly, it's really done very little. Notice the relative strength on the dollar, both the daily and the weekly, have gotten improved during this period of time. If we look at the VIX, and let's look at the VXX, it shows up better on my charts. The VXX, it's still below the 200-day moving average, but it broke out this week. Look at the weekly. What this chart tells me, get above the $28 range, this thing could get some legs. But until then, it's done this before and it reverses, and that still has to be the underlying belief. But a breakout here, I'm prepared for it. Look at the volume that came in on Friday, 44 million shares is the average, and on Friday they had 123 million shares. Bongo turned green, and if this was a stock, what would you think? Mobile breakout from a squeeze, a new person buy signal, pocket pivots, and kahunas. I've been burned by false breakouts so many times with this, but I use it as a hedge. It's not how I make my money. Gold, what a faker. Gold, you think it opens up and it closes down several days in the last couple. Look at the weekly, the same thing. Now, is gold coming to a head here? Maybe it is coming to a head. And, I don't want to overinterpret, but I could draw some lines sort of like that. And maybe gold is at a point of breakout. Silver is getting a lot of chatter as being a potential for the short sale attackers. I bought silver this week, and I bought more on Friday when I saw the gap up. Totally different picture than gold, and much better even if you look at the weekly. I think silver is interesting here, and I will probably continue to add to it. And gold miners, I think you could find gold miners or miners in general, some of which may have a lot more steel than others, look a lot like gold, but have come up the last couple of days. Now, as I said before, when I'm bearish on the market, I don't want to tell you a long list of stocks that I'm going to go out and buy. And in fact, I've got longs and I have shorts. Now, over the longest period of time, since I'm mostly a bull, my longs outperform my shorts. Last week, my shorts outperformed big time. They're up 5 or 6%. If I look at the stocks industry groups, you can see we've got 174 in our universe. If I change this to 2-day up force, only 13 had positive momentum. $26, 2-day down. But if I look longer out, the 5-day down has got 82, and the 5-day up has only 19. So this market has really changed over the last week to 10 days. Now, I do go through usually the top 10 groups. I'm just going to call out a few things. I'm not going down the whole list. GameStop. Let's look at the fundamentals here. Revenue dropping. Earnings per share negative. There is no way in any universe ever that this stock is worth its closing price on Friday of $325. And you've got to have a heart of cement to live through these changes. It's gone up for a simple reason, because you have a concerted effort by individual investors to buy the stock, force the short squeeze, and not sell stock, which pushes the stock up higher and higher. You don't want to be the last one in. I saw one guy at $45 million in profits off of a $75,000 investment. You got to tip your hat, and we're little guys, so the little guys beating up the big guys is David and Goliath. It will not end well. Be careful if you start chasing this now. The demand is unbelievable. The 1-day range is unbelievable. And it's 2,000% above the 200-day moving average. How sustainable is that? It's not. And don't say anything negative on a board about this trade because you'll get attacked. Because there are people that believe it's going to go to 1,000 or 2,000, and it may, depending on how the shorts deal with their short position. That's gambling, not trading, so I'm going to skip it. Consumer electronics, well, this is cost. Their headphones used to be good. They suck compared to the best in the market. This is a stock that was dead. And all of a sudden, it's gone crazy. Market cap, it was so small it didn't even have one prior to this move. Now, I don't use Hgsi to get my short percentage. Just wanted to make sure it wasn't there. I'm just curious if Hgsi has shorting percentage. Let's just open up my view. Let's type in short. Whoops, I did that too fast. Let's try that again. Short. How many, I don't know what a candlestick short day, short stops. Yeah, I don't see anything about number of days to cover on the short side. George, if you're listening, I don't know if that's something that you can get. So how do I get it? Simple. Go into MarketSmith. I type in, say, costs. This is crazy, isn't it? Look at this chart. And I go to weekly. The short interest was covered. So I certainly would not want to be long this if this is accurate. Small floats, small caps, the short interest is gone. Does that mean it's all covered? Maybe. I don't know what the delay is. GameStop, shorts just 1.9 days to cover. It's come down 40%. That's where I've been getting my short interest. If you're watching this and you've got a better place to get short interest, and if it's free, please either email me at hgsidoc@gmail.com or just put it in the remarks on YouTube. I like to share that with others. I can't buy these stocks. These are story stocks, and it's probably too late. New Concept Energy. I mean, who ever heard of this thing? Almost no revenue, no earnings, huge demand, and look at the swings here, up to $30 from $2. It's good if you got them. So forget this stuff. Let's look at what I thought were interesting this week. And then we'll say goodnight because we've gone over an hour. And now that it's January 31st, I won't tell you what it is, but it's a secret big day for me. Warehouse view. I'm just going to change this to scorecard. Actually, I don't want to do that. It took out some of them. All right. So I got 44 things that I looked at that I'm going to follow. What do I mean by follow them? Simple. It means that I have radar screens in TradeStation and I got MarketWatch. And if I look at them, there's not a lot of industry groups. There's a couple of biotech plays. I already own Celldex, but a breakout, kind of a cup and handle breakout occurring in this marketplace. Big up day on Friday. Bongo turned green, had a mobile breakout from a squeeze on the up in here. A bunch of kahunas, looks good on the weekly. I like that one a lot. All these no revenue biotechs are subject to data surprises. Okay, so I like that one. Novavax, well, you missed your opportunity. CGen, which is a horrible pattern here, except if one realizes you had a green candle low at minus 100% on the high jump, you've got earnings. This has been a darling. I'm not going to buy it here. I got to see some positive momentum. But this thing is so oversold that I put it back on my watch list to follow. The leader in this market are these genomic companies like Fulgent Technologies. Earnings per share growth is great. Now, when I see this, it's much better than the PE. I get excited. But another thing that I use MarketSmith for is, let's put in Fulgent, FLGT, is I like to look at what they say are earnings per share growth. And here it says 2020 was great, but the earnings per share growth slows down a lot this year. So that means something to me. And 2 days of short interest. Okay. But what a great runaway move here. Owings & Minor is a healthcare supply channel stock that has really come off the dead. And it looks to me like if it can break above the chandelier stop and mobile breakout from a squeeze and a bunch of pocket pivots, great earnings per share growth coming in. And you wonder, does this one have a short interest? And is that why it's been popping up? I mean, last week I didn't care about short interest. Now I feel like a fool for not. 5 days of short interest and it's growing. 71 million shares on the float. Maybe there's something to Owens & Minor. Maybe they're jumping on that. Restoration Hardware looks at a good buy point because it's pulled back to the 50. But with this market as soft as it is, I need to see some momentum come in for me to be interested there. A beautiful chart, but it's a SPAC, is Tuscan Holdings. Big run up here, and it pulled back to the 50. And on the 50, it had a mobile breakout from a squeeze, a new John Person buy, and 2 days ago, pocket pivots and kahunas. I guess within the life sciences, one I've been pumping, sort of, I guess I want to use that word, has been Quidel. And you can see I've been talking about it because of its earnings per share growth, and it finally broke out. It's already run a lot, but it was so beat up, no one's to say that it can't continue to run. I like that one as well. And if I had to pick a stock that I wanted to buy on its merits, it's probably this one, Hologic. So let's look at it very quickly. Beautiful uptrend. It's pulled back to the 50 and it broke out on a bad market day with a mobile breakout from the squeeze, a person buy signal, pocket pivots, kahuna, and market catcher turning positive. The weekly, the only bad thing is it's had a big long run. It's got huge earnings per share coming into the chart, into the stock, has a multiple of 12. That makes no sense if it's real. Probably is real. HOLX. I didn't want to hit that one. Oh no, that was bad. Because I have all kinds of problems with this thing's licensing system. All right. So if I pull back up my MarketSmith and look at HOLX, 2 days of short interest, nothing big. Breaking out of its pivot point. Look at the 2021, $9 on 125% growth. It'll slow down in 2022. $9 at 125%. It's got a multiple of 12. I think I'm interested in Hologic. So I might go look at it in TradeStation, for example. HOLX. Let's go into my advanced screener and let's find weekend review. So I got daily, weekly, and monthly. Nice uptrend. You can see the trend line support underneath. New person buy signal came in on Monday. New Dr. K. Laguerre RSI signal came in on, not on Monday, on Friday. On Friday, we had a minor cycle low on Roy Kelly. Carter breakout tools firing, coming out of a squeeze. The Hgsi tool switched to green. I look at the weekly, we're in a strong uptrend with good support. We have some, these red dots are a little bit bothersome. They occur after a big move, but we have a nice uptrend. I look at the volume, let's see, daily. turning positive, no big deal either way. It hasn't taken out the prior highs. High jump, it's at 57. I think HOLX looks interesting using the Q tools. Not quite up to the top yet. This could be resistance up here, but you still got a few bucks to run. You can see you had the bullish headwind come in on Thursday, right off of trendline support. I think this looks good. HOLX is one that I'll be watching this week as well. PerkinElmer's just got a beautiful chart riding up that 50. I need to see some momentum, kind of like Restoration Hardware, but look at the earnings per share growth. Some of these stocks do COVID, most of them do oncology, cancer, which is my world, and they've got some really exciting and new tools that are changing how we deliver cancer care, and not just in the research setting. Here was one of the silver stocks that looked interesting to me. Yeah, it had a red candle here, but it still had a Bible gap up. It closed well above the low of the gap up day. If silver breaks out, there's probably lots of different ways to play silver. There are 2X and 3X ETFs. Here is a SLV, and you could see a nice gap up. My guess is with all the chatter I'm seeing that it probably gaps up on Monday, and I'll be glad I bought some before the end of the week, as I did. So, and then I guess if you really want to see if you can jump on the short selling crazy bus, let's look at Tootsie Roll. It's already had a big run. Okay, it ran from 30 to 41. It's had a big run. It's got revenue, so it's not without revenue. Let's look at MarketSmith. TR, I can't believe I'm talking about Tootsie Roll. I certainly used to love to eat them. 99 cents, no reports for 2021. That's a little bit bothersome. Trying to find a cup here, I guess. Relative strike rate's only 60, but what I really want to see here, it's got 16 days of short interest. This looks like it's getting the same attack, and it hasn't jumped yet. And unlike the others, it wasn't a penny stock. It's already been in an uptrend. So Tootsie Roll, if you really want to play those games, might be one you can play with. And Twinkie was another one. Where is that? Actually looks like a breakout here, doesn't it, with a Bible gap up? And again, just for grins, let's look at Twinkie. I don't know why they call it Hostess Brands. They should switch it to Twinkie. "13 days of short interest." I'm not advocating them, but I feel like I'm missing out by not playing the short squeezes, and that looks like one that's setting up. Other stocks look interesting here. OQTA, a big infrastructure play. Why? Because like Restoration Hardware and like PerkinElmer, it's sitting right on its 50-day moving average. I want to see it move because we're not in a market where I'm buying everything. And I think on that note, I'll leave this here for a second. Nautilus is another one with a great chart. Starting to break out as well. On the short side, and this is all market driven. If the market rolls over and has a horrible week, these stocks are going to dive. But if the market bounces, since they got clobbered this week, they may be the first to go up. And there's some great companies here. The spiders, they're breaking down. If I go into those Q tools, and I'm almost done because I'm getting tired, and I want to get this done tonight so it doesn't interfere with my special day tomorrow. The spiders, they're breaking down. Now, I would have rather shorted them a day or two ago, but they're breaking down. So they made my potential short list. Tesla. God, how could somebody short Tesla? Well, Tesla is breaking down on both the weekly and the daily. Its earnings are out. It's got great earnings coming in. That's probably the time it's going to dive. If you are getting a short call, a margin call, because you're short something, this is a great source of funds. You made a ton of money on it this year, and that might be all that we're seeing. Amazon, doing nothing. Earnings are out this week. It's, you know, if it doesn't break out at some point, you wonder how long it's going to go sideways for. Shopify already did break down some, still holding at the 50. Goldman Sachs, still got above the 50. Ulta Beauty, breaking down below the 50. I put these in trade desks that I want to look at. I put these in a watch list, just like my buys, and I look for these. If they all turn red, I know which way the market's going. Trade desk, which has been a great winner, failed at the 50. This is when you wanted to short it, when it failed on a retake. And you got your chandelier stop right there. That was the time to take the trade. I think you probably still can look at this. Again, depending on market conditions. So I leave you with thanks for watching. I leave you with a beautiful picture from my back door, my porch, back porch, whatever they call it, the portal in my home in Santa Fe, although everything's white now. And we'll see you next week. Be careful. These short sellers are fun to watch. The attack on the short sellers. I think it's actually kind of cool. And I'm not at all putting down what they're doing. In fact, I wish I was smart enough to have done the same thing. If you think this has never happened before, let's see if I killed it, I think. Yeah, I was going to show you something that someone shared with me this evening that was just freaking hilarious. And it was about some guy that had a little company that saw his market cap go from from 5 million to 50 billion because of a short squeeze. And it was one person company. They did nothing. Good night, everybody, and I'll see you soon.